U.S. mortgage rates rise, hitting highest level since end of June. Rates increased to 5.66%, climbing for a second week in a row. Economists say cool down in price growth likely to continue. Now, as we know, the Feds already came out and said that they are going to raise the rates next month, right? So we are actually this month, right? It's September 1st, right? So they're going to be raising the rates pretty soon. And now, it looks like mortgages are starting to creep up more and more. Now, look at this. So we started creeping up, big time. We're still pretty good at the beginning of the year. But then around June, it really peaked at around, I want to say, almost 6, like a little bit more than, like maybe about 5.75. And then basically mortgages stopped, applications stopped, and the banks started freaking out. So they lowered the rates a little bit, but now they are starting to creep back up. Now, can we get above 6? Now, I think on some earlier videos that I made, I did talk about how I do feel the rates might end up, between 7, 8, maybe 9% by the end of the year. If that is the case, we are going to see basically the housing market completely shatter right now. If we jump over to the Redfin weekly housing market data and we see the median sale price, this is the drop that we've had across the United States just from those rates dropping. Now, as the rates were going up, if we go back here, let me go back and show you. Let me click on this. So you can see how even though the rates were rising, we could see the bubble started to go up quite a bit here. This was like January, February, right? People saw it coming. People wanted to get in one last time before, it peaks. And that was the peak right here, right in June. And if we look at the rates right in June, they were basically the highest they were. So are we going to continue? Well, we're definitely seeing the rates rise. We saw it for 2 weeks in a row. I definitely think it's going to keep rising. Now, look at what that did to basically the housing market. I think that in general, this peak was, although yes, it was part of the rates going up, I also think people just realized that we're in a crazy bubble. And a lot of people just said, hey, hold on. Wait, how much are houses? Houses that much? No way, Jose, I'm pulling back, right? I think that's ultimately what I feel happened. Because even though the rates are really like high right now, you're comparing rates to a year ago. Remember, you have to put this into perspective. The rates that we had last year and the year before were historically low. They were only that low because of coronavirus, right? That is not normal. Normal is anywhere between like 4-5%, right? So the idea that, okay, so we are a little bit higher, people are just thinking like, man, I could have had it a year ago for so much cheaper. But let me tell you, it's never going back to that, okay? We're not going back to under 3. Now, so could we go under 3? Yes. What would have to happen? Basically, we would need some type of catastrophe where the Feds, need to pump money into the economy to save it, and then they're going to lower the rates, right? But right now, we're not seeing that right now. So we can't anticipate that, right? As a whole, I'm just telling you that the rates right now, although right now they're creeping, up to 6, they are getting kind of high. This whole area is normal, like standard operating procedure, right? It's kind of normal and it's not bad for the economy. The economy still chugs along. But what we're seeing now is that I believe that people just realized that the bubble just inflated way too much. And there's recession fears out there, guys. One of the biggest fears right now is that we have inflation. So everyone basically, the people with the means jumped into the housing market to hedge against inflation, to put their money in properties and to ride out the storm. But then the Feds started aggressively raising rates to really bring down that inflation. Now, by bringing down inflation, you might have those people that were hedging against inflation. If they start seeing inflation go down, they might want to unload those properties. Because remember, anybody who bought in 2021 and 2022, they basically bought at the top of the bubble. They are basically, overpaid for their house. And the reason is, if you look at the market, what happened was that we had very low supply and we had a lot of buyers, a lot of people with the means, but remember, we had historically low supply and now we're seeing it, right? Now, my prediction basically is that Well, before I give you my prediction, during when it was going up, I literally was in my house saying, my house is not worth that much. Like, that is stupid. Who the hell just bought my neighbor's house for that much? Like, why are people so stupid? Like, not stupid, I'm sorry, I didn't mean to say that, but why are people buying at such high prices? Like, what is going on here? You had like single family, like regular people, like single families, people buying single family homes, like families buying single family homes, that they were just like trying to get in. They were bidding above asking price. And I was thinking, what is going on here? Don't you guys know that you guys are totally overpaying for this house or this condo or whatever, this apartment? But people just didn't care. They wanted to get in. But what I did see was a lot of people, especially in my neighborhood, when we were happy when some of those houses sold. There were few houses that sold, but the few that did sell, we were like, I cannot believe it sold for that much. Wow, our house is worth that much. But then I told my wife, I was like, hey, don't get too happy, because this is not real. Yes, we could sell it, but I'm telling you, this is not normal prices. This is not normal growth. This is because we have zero interest rates. So go ahead and like celebrate, on your own. But at the end of the day, these prices are going to come down and they're going to level out. And it really does suck for anybody in some ways that, did buy in this big pop. Now, if you're looking to buy right now, I would say just wait. Why still buy on the peak, right? Like, when we're totally in the bubble, why buy now? I would say wait until the prices drop 30%, 40% before you jump back in. That's my advice, because we're definitely going to see, look, even if it's not going to happen overnight, but even if you wait 3, 4, 5 months, the prices are going to be a lot lower than they are now. Now, remember, housing doesn't just jump back up overnight. Housing takes a while to drop and then even longer to start climbing back up. So you will have plenty of buying opportunities. Just remember, it's better to buy low with higher rates than to buy high with lower rates. That's just my advice. And obviously right now we have both high and high rates. So we have the worst of both situations. So my analysis is don't buy. And I'm not a financial advisor, but this is just my opinion. But it just seems like this is like the worst possible time to really get into a house, knowing that rates are going up, knowing that we're going into a recession, we might have layoffs, and interest rates are high. So pretty much the worst case scenario. Now, I hope, let's see what happens. Let's see if we could all ride out the storm. Hopefully a lot of us are saving, and hopefully a lot of us are going to have great buying opportunities in the near future. I am hoping that I will be one of them myself. So I'm going to go ahead and finish this video. I want to say thank you so much for everyone who's been watching my videos and supporting my channel. It really does mean a lot to me. Thank you guys so much. Now, if you're new to my channel and you like what I have to say, please don't forget to smash that subscribe button and go ahead and like and leave a comment. Again, thank you guys so much for watching. I love you guys, and I'll see you on the next video.